All right, let's jump right in. We're going to talk about a type of insurance that's, well, it's a total game changer. It's a model built for one thing and one thing only: getting money to people the moment they need it, without all the usual headaches and red tape. We're talking about parametric insurance.
Just picture that for a second. You've got a farmer, his entire livelihood depends on the weather. A drought hits. He has insurance, but that policy is a promise that might take months to come through. By then, it could be too late. This is the exact problem we're going to talk about solving today.
So, here's our game plan. First, we'll look at why the old way of doing things can feel like a broken promise. Then, we'll get into the elegant, trigger-based solution. We'll break down exactly how it works, look at its impact out in the real world, and then we'll get real about the risks and what's next for this whole idea.
You know, the fundamental issue with traditional insurance is that it's all about proving what you lost. After a disaster, you have to document everything, fill out endless forms, and then wait for an adjuster to come and decide what your loss is worth. It can be slow, it's often subjective, and honestly, it's just frustrating when you need help right now.
And this slide right here really gets to the heart of it. It's a complete shift in thinking. See, instead of arguing over the value of what was damaged, parametric insurance asks a much simpler question. Did a specific thing happen? Yes or no? If a hurricane's winds hit 100 miles per hour, that's a fact. You get paid. That's it. It moves the whole conversation from a subjective debate to an objective fact.
So, this trigger-based idea is the solution we've been talking about. And it's not just some small adjustment to the old system. No way. It's a complete reimagining of what insurance can even be. It's a system designed from the ground up for speed and certainty in a world that feels more uncertain every day.
Okay, so this definition is the key to everything. The parameter. That's the secret sauce. It's just a specific measurable event. It could be wind speed, it could be rainfall levels, it could be the magnitude of an earthquake. Instead of relying on an adjuster's opinion, the entire policy hinges on pure, clean, verifiable data.
And you know, this isn't some brand new, untested fad. The basic idea has been floating around since the late 90s. It really got proven on a massive scale back in 2007 with a program for Caribbean governments. And today, the model is absolutely exploding into all sorts of areas: farming, business interruption, even cybersecurity. It just works.
So how does this all actually work? It sounds almost too simple to be true, right? But it really does boil down to three very straightforward, transparent parts that all fit together perfectly.
It's really just a simple three-step dance. 1, you agree on the trigger, an objective, measurable event. 2, you agree on the payout amount ahead of time, no surprises. And 3, you pick a trusted, independent data source, like a National Weather Service or satellite data, to be the referee. If that source says the trigger was hit, the money is released. No arguments, no back and forth, the data decides.
Let's make this real. Meet Maria, a coffee farmer. Her policy isn't about proving how many of her plants died. It's way simpler. It's tied to one question. Did the rainfall in her area drop below 100 millimeters? The satellite data confirms it did. Boom! The trigger is hit, and that pre-agreed $5,000 is in her account in less than 2 days. She can buy feed, get water, and save her farm. It's that direct and that powerful. And this isn't just about helping individual farmers, as crucial as that is. The impact of this model is scaling up and being felt at every single level of society, from small villages to entire nations getting ready for major catastrophes. The reason it's having such a huge impact is because the benefits are so clear. The speed is a lifeline. The transparency builds trust because it's based on objective data. It makes insurance accessible to people who are completely shut out before. It's incredibly customizable for unique risks, and because you cut out all the administrative bloat, it's often more affordable.
And let's talk about scale for a second. That program for Caribbean nations we mentioned earlier, it has paid out over $250 million. And that money gets there fast, usually within 2 weeks of a disaster. This is the cash that gets the power back on, clears the roads, and provides immediate aid to citizens.
And what's so amazing is that while this works for entire governments, technology is also bringing it down to the most personal level. In places like Kenya, small farmers can get microinsurance on their phones. When the satellite data confirms a drought in their area, the payout gets sent directly to their phone through mobile money. It's just an incredible fusion of data, tech, and finance.
Now, as revolutionary as this all sounds, we have to be honest here. Parametric insurance is not a perfect fix for every single problem. It has one major inherent risk that you really need to understand. It's not a silver bullet.
And that one fundamental challenge, the big but in the conversation, is something called basis risk. This is probably the single most important concept to get your head around when you're looking at the limits of this model.
So what on earth is basis risk? Well, it's basically the risk that the trigger doesn't quite match your actual experience. Imagine the official weather station is 5 miles away. It gets just enough rain to avoid triggering a drought payout, but your farm gets 0 rain and your crops are failing. You suffered a real loss, but because the data from that one spot didn't hit the trigger, you get nothing. That gap between the data and reality, that is basis risk.
But, and this is the exciting part, technology is closing that gap faster than ever. AI and big data are allowing us to create hyperlocal, super precise triggers that dramatically reduce basis risk. Things like blockchain and smart contracts can make those payouts automatic and even more secure. And because of this, we're seeing this model expand into all kinds of new areas, like cyber attacks and supply chain failures, making insurance a reality for more and more people.
Which kind of leaves us with one big question to think about. In a world that seems to be getting more complex and unpredictable by the day, maybe the best kind of safety net isn't a long, complicated policy full of fine print. Maybe, just maybe, it's a simple promise based on clear, transparent, and immediate data.